What's going on? Welcome back to Crypto Quandary News. If you're new here, thanks for stopping by. Hit the subscribe button, the like button, and we'll keep you updated with any and all cryptocurrency news on a weekly basis. So we're looking at the coin market cap. We got Bitcoin in number 1, Ethereum in number 2, XRP in 3rd place, Litecoin right behind it in 4th place. There is quite a bit of a difference in the market cap over here, but we'll see eventually. Litecoin may bypass XRP. However, it may take a little bit, as you can see. So EOS is in number 5. We have Bitcoin Cash number 6, Binance in number 7, Stellar in number 8. And I do want to say that Binance Coin did take a big jump since last week. If you see it over here, you see what was going on. Stellar in 8, like I said. Tether is in 9th, which is a stable coin. Number 10 is Tron, and Cardano is in 11th. So without further ado, let's get into the news. All right, so the first order of business, ABRA crypto wallet now stores real Ethereum, not just synthetic version. So in the past, if you do have ABRA, you would have noticed that you could not send Ethereum off of your ABRA. The only ones you could send off were Bitcoin, Bitcoin Cash, and Litecoin. Now, you can also send Ethereum to your own hardware wallet if you choose to do so. So, cryptocurrency wallet provider ABRA is now letting users deposit and withdraw Ether directly from its app. Yes, deposit as well. Previously, users could only make deposits into the app via a US based bank account, an American Express card, BTC, BCH, or LTC. Then, if they choose, they could have their balances converted into a synthetic version of Ether, meaning they were exposed to the cryptocurrency's price movements but didn't actually hold the asset. So what that means is exactly what it says, basically. If you wanted Ethereum, if you wanted to take advantage of, the prices going up, down, all around, or a lot of the other coins or assets on their platform, it's essentially a synthetic form of it. So you would deposit into your wallet via either US dollars or Bitcoin, and from there, you wanted to take advantage of Ethereum being so low and saying, all right, it's 130 right now, I'll sell it when it's 200. What you would do is you would put it into Ethereum, however, you couldn't send it off, so you didn't really have the actual coin. But what would happen is you would be able to sell whatever you had of it once it hit 200, but like I said, you could never actually transfer it to anyone else or yourself or your hardware wallet or whatever. So now they've changed that, and I can actually attest to it because I've seen it, and you can deposit into Ethereum. You can transfer in Ethereum. You can transfer Ethereum off of it. Says by adding the native Ether support, ABRA users will be able to easily buy and move from Ether to other wallets to the ABRA app, said the ABRA CEO and founder Bill Barrett in a press release. This also opens up the potential to use Ethereum as an on-ramp to invest in other assets listed on ABRA. Yeah, so you could basically send Ethereum to, so if you were a big investor in Ethereum and you have a ton of it and you want to buy, say, I don't know, Litecoin, Bitcoin, you could send your Ethereum over to the wallet and now transfer it into Litecoin or Bitcoin. In the near future, we will move other native deposit and withdrawal support for the other ERC20 tokens currently listed on ABRA, in addition to other tokens that we will now be able to list, which is very exciting because a lot of people like to buy these things and transfer them to their own hardware wallet, their own offline ledger. From gas to cash, Joseph Lubin, an Ethereum co-founder and founder of the Ethereum development studio Consensus, framed ABRA's move as a sign of the network's evolution. While Ether was intended to be the fuel that powers applications on the Ethereum platform, we are moving into a world where an enormous variety of tokens can start to be used on the payment side of a transaction, Lubin said. ABRA initially added support for Ether again as a derivative back in November 2017. The firm was also looking to strengthen its wallet app storage capability, allowing users to hold multiple currencies at a given time. Just last month, ABRA announced it would allow users to buy fractions of traditional investment instruments such as stocks and exchange-traded funds in synthetic form as well through its blockchain-based app. So, and that is something that they have. I'm actually waiting for that to start up, the stocks and ETFs on ABRA. So that was news article 1. No more synthetic ether on ABRA. Number 2, Cardano. And you guys who have followed me know that I am a Cardano. I like Cardano. Volume's almost double. Coinbase could trigger rally. Coinbase? Really? That would be huge. Cardano price up 17.4%. Coinbase could offer support for ADA. What? Coinbase could offer support for ADA or Cardano. Transaction averages almost double in the last 2 weeks. And if you guys follow it on your Blockfolio or whatever, you would notice this. If you check the charts like once a day or even every couple days, I mean, it's a chart for a reason. You have a, you can see what's going on in the past couple days, weeks, months, years. So if you followed it, you would know. After dropping from the top 10, Cardano is up 17.4% in the previous week. Because of this, it is one of the top performers and could register more gains if Coinbase supports ADA. If Coinbase supports ADA, that would be a wonderful day. Cardano price analysis fundamentals on the end. Coinbase never-ending controversy makes them appear weak. However, as the third most liquid exchange after Binance and Liquid, their influence cannot be written off. The Coinbase effect may be waning after the exchange's effort of increasing the number of coin offering regardless. Listing exposed. Oh, whoever writes these articles sometimes. Listing exposes the asset to more than 25 million customers, tagging extra demand from an exchange that is secure, never hacked, and insured. And again, this is newsbtc.com, so I don't know why they're missing a capital after a period and a bunch of other whatever. Back in quarter 2018, Coinbase said they were exploring 5 coins, including Cardano, during their conversation. They would work with banks as well as regulators to enable the rollout in as many jurisdictions as possible. At the same time, they would remain transparent to avert accusations of insider trading. So yes, this is something that I do remember. I was pretty excited about, but I was not putting all my eggs in one basket on it because it was hearsay, and to have ADA on there would be wonderful. However, they were talking about XRP, they were talking about this coin and that coin, and there was a couple different ones, and now I believe XRP is on Coinbase, I believe. A couple different articles I'd read. I do not have Coinbase. I use ABRA, but I'm not saying anything bad about Coinbase. I just choose not to use them. Of the 5 coins, Cardano is the only asset that is yet to be listed. Against expectations, in the last 3 quarters, Coinbase were aggressive. I guess they're saying in the last 3 quarters, Coinbase were aggressive. Listing diminutive and low liquid assets as Basic Attention Token, OX, and Zcash to some extent. This was understandable since ADA remained centralized as development steps up. However, the recent conclusion of Byron and the transition to Shelley would increase chances of Coinbase. So I guess they're waiting for a more decentralized, the more decentralization that ADA or Cardano will get, the more they're looking into it. Well, be ready because, like the article says, Byron and Shelley, the transition to Shelley, are coming soon. Stay tuned. I believe it's April 18th to 19th, the Cardano Summit. Oh, what? Yep. Flipping Tron and let me move this up so you guys can see it. Flipping Tron and Cosmos Atom. I don't know what. Forgive me. Cardano is back to the top 10 after adding 17.4% from last week's close. Although part of this is because of investor expectations. It is favorable fundamentals and attractive candlestick arrangement that places buyers at an advantage. From the chart, it is clear that bulls are in control while trading in a breakout pattern above 4.5 cents. Bears are yet to reverse gains of March 9th. Concurrently, the last two bars seem to be breaking away from the 90-day consolidation. I'm skipping that because we are beyond that right now. Technical indicator, expectedly a surge of volumes. Okay, so 88 price right now. We'll check out 88's price really quick. So 88 did break 5 cents already since then. Barely, but we did it. So yeah, that's the whole entire chart. And I believe it broke within the last 24 hours, I want to say. Yeah, this is the daily chart. Where did we break it? Yeah, it's been broken for a while. Yeah, yep. So we did fall back right around here. It seems to be that we are above, we're looking above, we hit that 5 cents mark, so which was a critical area. That was something we've been trying to break for a while, and we finally did it. So move on to the next article, though. I don't want to spend too much time on one article. Why 2019 may become the year of enterprise blockchain. Last year, 95% of companies across different industries were investing in blockchain technology projects. In 2019, these pilot projects are finally moving from test stage to the end users. Goldman Sachs, a former vocal skeptic of the blockchain, has launched a crypto investing product for their clients in the end of last year. If you notice, a lot of people who are skeptical, this and that, big wigs, so to speak, are launching their own crypto investment products and such. Beyond investing in finance, major blockchain products have released in several other industries, including cybersecurity, healthcare, and agricultural. And this is Forbes.com. So enterprises no longer question whether blockchain is even worth the attention, according to Sky Guo, CEO of Cypherium, a startup offering enterprise-ready blockchain solutions. On the contrary, Guo says they are now proactively seeking new ways of incorporating this technology into their legacy system. Henry Aslanian, head of FinTech and Crypto Department at PwC, said that 2018 cleared the noise in the blockchain space. 2019 will be the year when big players enter the crypto world. Indeed, in the first months of 2019, several major companies have signed off new partnerships with blockchain startups, invested in blockchain projects, and new consortium partnerships emerged. Further, in 2019, we should see more enterprise-level decentralized ledger technologies emerging on the market as the underpinnings for those are strong. Ready-to-use software is now available from top vendors. Amazon, IBM, and most recently Oracle offer enterprise-grade blockchain solutions. Unlike the open-source blockchain software, enterprise solutions come with better scaling mechanisms, security, privacy, and additional protocol. Sorry, these ads are driving me crazy. In our case, we have improved upon the existing Ethereum consensus mechanism to maximize decentralization and scalability without sacrificing one for the other. This in turn allows to achieve higher transaction speed and smart contract execution time. So yeah, the blockchain is not just for people who want to invest in cryptocurrency and make money, and it actually has real use case scenarios. The particular appeal of enterprise-grade DLT is that it also enables unprecedented collaboration opportunities, not just within large organizations, but cross-company as well. Several of the large world food suppliers, including Nestle, Unilever, Walmart, Kroger, and others, are working with IBM to create a global food tracing system on the blockchain. So there you go. There is one use case that could happen in the world that basically anybody could understand. It's a tracing system on the blockchain for uh, a global food tracing system. So they're basically tracking things with it. Collaboration is a crucial factor here to reach complete visibility into the origins of potentially hazardous goods and rapidly trace the source of contamination. Guo said enterprise-grade solutions set unified standards for such collaboration, enabling faster adoption and better interoperability between companies, ultimately benefiting everyone in the industry. Interoperability has significantly improved. Lack of connectivity mechanisms between different types of blockchain solutions was a major roadblock to wider adoption, but these days tech companies are presenting new viable ways for establishing connections between different ledgers. Ripple has released an interledger, midware arbitrary protocol that can connect different types of ledgers, both distributed and traditional centralized ones. Its main goal is to improve interoperability between financial institutions. The additional benefit is that Interledger allows users to store aggregate transaction data off a public blockchain by using a connector to transfer funds between private versions of the Ripple network. So there are a lot of different use cases if you're not aware of blockchain technology. It's not just about taking cryptocurrency and investing in it and selling it when it's high. And I mean, that's just one thing. Traders, people who want to hang on to it for when it's used more as when cryptocurrency becomes, I guess, more adopted, you could say, once more mass adoption hits and more people are, susceptible or they're more comfortable with using it as a means of payment in their businesses. Once that happens, you want to make sure you have some cryptocurrency. There are some states right now that are actually they're actually putting laws out there. I don't want to say what state it is because I don't want to give the wrong one, but I'm 99% sure I know which one it is. But you can go ahead and give it a Google. There's a state out there that has a law that every store must accept cash because the society that we are coming into now is very fast paced. People go in somewhere, they want their coffee like that. They want to be able to just pay and have their coffee and walk out the door because they're on their way to work, especially in places like New York City. People are on the go. A lot of people, wake up, get dressed, out the door, stop at their coffee shop, and all of this is in, walking distance. They're out of their house at the coffee shop, boom, right to work. And time is precious to them. So they want to be able to go in since they can't order it. I mean, I guess you could order it, but a cup of coffee, come on. They're walking in there, they want their coffee quick, and when they see a line, it's like, what the heck? There shouldn't be a line in this day and age. That's the thought process. So they're walking in, they're like, all right, I need a whatever, coffee and, large black coffee, whatever. And they think it's quick, but there's like 10 people in front of them that are sitting there fumbling with cash or, swiping a debit card or a credit card, and it's, the system's taking 10 minutes, or it's not. When we have all of this technology sitting right here, all you have to do is take your wallet and, just boom, with the click of a button, you send the transaction, and it's done. It's automatically, it's so fast. It's ridiculous. You wouldn't have time to even open your wallet. Somebody clicks a button on their phone. Oh, what's your thing? Oh, they scan the QR code. Boom, it's done and gone. Like, they're out the door at work already. It took 2 minutes to walk in the store, get the coffee, and walk out, and not 10 because there's a line. So there are other use cases. There will be more use cases for this. And like I said, coffee is just one. That's just one idea. I mean, you can buy vehicles with Litecoin now. There's pizza places that are accepting this stuff, different types of cryptocurrency. And it's not just Litecoin. I say Litecoin a lot because of what it is and how fast it is. And what the Litecoin project has, you know, what Charlie Lee has in place, what plans in place he has, and the community behind it and what they're trying to do with it, and you know. But like I said, there are many coins out there that are quick, very fast transaction speed, very low fees. So a lot of these businesses are going to start accepting these things in the future because why would you pay? And just for an example, why would you pay 50 cents per transaction on a credit card when you can go ahead and pay a fraction of a penny for a Litecoin transaction, you know, with your business? Like, why would you do that? It's so much cheaper, more efficient, faster. Things are changing, people. Just saying. So keep researching, keep doing your homework, and if anybody has any questions, feel free to drop them in the comments. But yeah, like I said, that's basically the end of the article. With ready-to-use software and a burgeoning ecosystem of blockchain consortiums joining the bandwagon has become easier than ever. So it'll be exciting to see what happens in the future with blockchain technology, with cryptocurrency, and the future. And don't forget, a lot of these things like Sophia, all these robots, they run off something called blockchain technology. So I don't know about you, but I know, or at least I think, and I'm pretty sure that blockchain technology isn't going anywhere soon. So with that said, I hope everybody has an awesome rest of your weekend, a great next week, and I'll see you probably sometime around next Saturday or Sunday. So with that said, take care and have a wonderful weekend, rest of the weekend, and great week.